In October, the Reserve Bank of Australia (RBA) continued to hold interest rates unchanged at 1.50%. Interest rate at 1.50%. The Australia's central bank said that low interest rates continued to provide support for sustainable economic growth in Australia. In view of the fact that inflation will go to its target over time, monetary policy will remain unchanged. The Aussie has appreciated since mid-year due to partly reflecting a lower US dollar. It is also weighing on the outlook for output and employment. Wage growth is slow and household indebtedness is likely to dampen economic growth and spending. Employment has improved in recent months and forward-looking indicators point to solid growth in employment over the period ahead. Non-mining sector is recovering. RBA believes that the global economic situation continues to improve and that economic growth is expected to improve gradually over the next few years. There are more signs that the non-mining sector is recovering. Australia's terms of trade are expected to fall but remain at relatively high levels. Modest rise in inflation. In terms of inflation, RBA expects a modest rise in inflation, which will drag down the Australian economy and depress inflation. In addition, there are signs that property prices are slowing in Sydney, but some markets are rapidly rising. The reasons that RBA keep the interest rates unchanged. 1. In considering that inflation will reach its target over time, the maintenance of policy remains unchanged. 2. If the Aussie continues to appreciate, growth and inflation will be lower than expected. 3. The employment in recent months has been good, and the forward-looking indicators are strong. 4. A higher Aussie will weigh on output and employment prospects. Lastly, Australia's terms of trade are expected to decline but still remain at high levels.